Hello everyone, this is Jeb Hamburger. Today is September 13th, 2011. It's 10:26 a.m. I wanted to give an update on some technical charts to my premium readers. Today we're seeing the silver ETF pull back. Yesterday it returned to the 50-day moving average and bounced off of it. And it's finding support along the short-term trend line, which began at the end of June. After it double bottomed at the key 3250 retracement level, which was a 50% retracement of the 2010 breakout to its high in April before the COMEX margin rate hikes, which we saw this waterfall decline. After this waterfall decline, we've had some sideways action and some strong support at this key level at 3250, where we recommended to readers to look to buy and to add to your position below the for $35 area. In early July, we saw a breakout of the 50-day moving average, a gap higher. We saw a return here to the 50-day moving average and a closure of this gap. And now, again, we're finding another pullback to the 50-day moving average and support the 3-month support trend line here. We've seen a very powerful up move in July, August, and September. We still have some overhead resistance after we surpass the $44 area. So I don't expect it to start moving parabolically or straight up. I expect some churning sort of action up and down along this trend channel for the next few weeks. And I believe that silver, we've seen the silver to gold ratio, and I've shown that in several of my bulletins, the positive aspects and the fundamental aspects of why I like silver. And we've seen technically that silver to gold ratio since 2010 has favored silver. So silver is something to take a look at as it reaches the support level here, and see if we can hold this short-term trend support and this trend channel. And we're seeing that the Europe's debt crisis is worsening. The Euro index has been down 29% this year. We've seen an off-the-cliff move in the Euro and a subsequent U.S. dollar rally. There's excessive fear and pessimism, fear of a repeat of 2008, fear of deflation returning. But yesterday, we saw silver and gold sell off to return to this support, and gold actually is returning to the 20-day moving average. So we saw this selling off, and a lot of my readers were concerned why we're seeing the sell-off. The euro issue is such a major issue, and we've seen gold and silver soaring. Well, I think that we're seeing investors selling some of their gold and silver bullion to cover some of their stock losses, and we may see more of that. But right now, with the equity market, we may be approaching a turning point, or at least a dead cat bounce in the equity market. Now, the dollar, we've seen a very powerful move with gaps upside higher, and I've shown charts about in yesterday's report that the dollar will most likely fill those gaps and return back and follow the downtrend as it reaches the declining 200-day moving average. Gold is now testing the 20-day moving average. It's in a range now from 1900 to 1750. For a while, for most of the month of August, gold was overbought. We were concerned about a consolidation, but this consolidation seems like it's going sideways in the 1900 to 1750 area. We have the resistance at 1900. We have support at 1750. A break below 1750, and we could see a return to 1600, and this would be normal in a bull market. So stay tuned to any future daily bulletins or video updates. Thank you.